All right, let's get right into it. We're going to break down the story of a publicly traded company that's making some absolutely gigantic market-shaking moves in the crypto world. They have a wild plan for Ethereum, and yeah, it involves billions and billions of dollars. So if you've been anywhere near crypto social media, you have felt this buzz. There was this massive transaction that just hit the chain, and it sparked posts exactly like this one all over the place. And the feeling is pretty clear. Some very, very smart money is making some serious moves. And what was that specific move? Well, on November 1st, a company called Bitmine Immersion Technologies just casually scooped up another 7,660 Ethereum. They didn't even buy it on the open market. No, they went straight to Galaxy Digital's over-the-counter desk for a private sale. We're talking a nearly $30 million purchase. That's a huge statement.
But here's the thing you gotta understand. As big as that sounds, it is just the latest purchase in what's been a relentless shopping spree. For this company, a $30 million buy is just another Tuesday. It's one tiny piece of a much, much bigger puzzle they're putting together.
So what is this grand plan? What are they building? Well, it's all part of this super deliberate, incredibly ambitious vision, and it's being led by their chairman, the well-known strategist Tom Lee. And they've given this whole plan a pretty epic name. They call it the Alchemy of 5%. The entire strategy, the whole game, boils down to this simple but seriously powerful mantra. Every single thing they do, from raising money to their daily ops, it's all designed to serve this little three-step cycle. That's it.
So, how much have they accumulated so far? Well, as of their latest buys, Bitmine's known treasury has hit a mind-boggling 3.4 million ETH. To put that in dollars, we're talking about a stash now worth over 13 times billion dollars.
And just to put that into perspective for you, 3.4 million ETH isn't just some big number. It means that a single public company now holds more than 2.7% of the entire circulating supply of Ethereum. Just one company. And you know what? They are nowhere near finished. The ultimate goal, the alchemy part of the plan, is to get their hands on a full 5% of all Ethereum in existence. That's about 6 million ETH. And the craziest part? They're already more than halfway there, and they've done it in just a few months. So this brings us to the core idea, the philosophy that makes their strategies so different. You see, it isn't just about buying and holding an asset. They're kind of riffing on a well-known playbook, but with a really critical twist. You know, the easiest way to get what Bitmine is doing is to think about what MicroStrategy did for Bitcoin, right? But where MicroStrategy treats Bitcoin as digital gold, a passive thing you just hold, Bitmine sees Ethereum as digital oil. It's an active, productive asset. It's the fuel that actually powers the entire world of decentralized apps and smart contracts, and you're supposed to put it to work. And this quote right here from their chairman, Tom Lee, just nails their whole vision. He really believes Ethereum is at this huge inflection point, kind of like Bitcoin was back in 2017 before it went on that legendary run. He's betting that its utility as the oil for Wall Street and AI is about to become completely undeniable to everyone. So how do they actually put that oil to work? It's this beautiful, simple, self-reinforcing cycle. Step 1, acquire ETH. Step 2, stake it, which helps secure the network and generates a yield. And then, step 3, and this is the key, they use those rewards to buy even more ETH. It's a compounding machine. Now, their staking game is actually pretty sophisticated. They're running this very deliberate 70-30 split. The big chunk, 70%, is staked directly on Ethereum's main proof-of-stake network, the Beacon chain. That's for maximum security. The other 30%, that's allocated to some more flexible, higher-yield strategies. So that direct staking is their secure foundation. But that other 30%, well, that goes into things like liquid staking, which gives them tokens they can then use in DeFi. And they're even getting experimental, looking at things like restaking to try and juice their annual yield up to as high as 8%. It's all about balancing that fortress-like security with finding new opportunities. And what does this all add up to in cold, hard cash, like right now? Well, based on the ETH they already have staked, Bitmine is pulling in an estimated $40 to $50 million a year in revenue. That's just pure cash flow from participating in the network. Incredible. Okay, but we have to be crystal clear about this. A bet this big, this concentrated, is a massive high-stakes gamble. So let's talk about the monumental risks and the equally monumental rewards that are on the table here. Let's start with the rewards because, they're just eye-popping. Since the company completely pivoted to this all-in on Ethereum strategy, their stock, ticker BMNR, has exploded. It's up over 700%. If you got in early on this play, the rewards have been absolutely astronomical. But, and this is a really big but, that reward comes with completely insane volatility. Just look at this 52-week range. The stock has swung from under $4 all the way to over $160. This is not for the faint of heart. It has been an unbelievably wild ride. So you can see the company is performing this constant balancing act. On the upside, you've got these huge potential tailwinds, like all the money that could flow in from ETFs, plus the upcoming Fusaka network upgrade, which should make Ethereum even better. But on the downside, there's the price of ETH itself, regulatory risks, and the fact that they have to keep raising money. Their key safety net in all this? A huge cash buffer of over $300 million. That gives them the firepower not just to survive a downturn, but to actually buy the dips. Okay, so that brings us to the final section. With so much on the line and a strategy that's moving at the speed of light, where does this all go from here? Let's take a look at the road ahead. First off, the speed of their execution has just been breathtaking. This whole strategy only kicked off in July. By August, they had 1 million ETH. By October, their treasury was worth more than $13 billion. It's been an absolute all-out sprint, and they're aiming to cross that 5% finish line sometime in 2026. So, what should you be keeping an eye on in the immediate future? I'd say 3 main things. First, their Q3 earnings report on November 14th. That's when we'll get an official update on their holdings. Second, you gotta watch how that Fusaka network upgrade performs. And third, you can literally watch the on-chain data yourself and see their wallets get closer and closer to that next big milestone of 3.5 million ETH. And all of this, it just leaves us with the one big final question. Is Tom Lee right? Is this truly Ethereum's ChatGPT moment, where one company's audacious move completely redefines its value for the entire world? Or is this an all-in gamble that's just too big, too risky to actually win? A bet so huge that if it goes wrong, it could create massive waves of its own. I guess only time will tell.